Good morning, everyone, and welcome to the Quantum Leap Morning Leap. This is our pre-market trade plan setup for Thursday, September the 4th, 2015. My name is Doug McKay. I'm the founder of Quantum Leap. Quantum Leap is a group of retail traders that have been together in one form or another for about 6 years now, coming up on 7 years, actually. Wow, been a long time. Anyway, it is a subscription service. It is a live trade room and live analysis. We come together and do these sessions each morning, take a look at the macro to the micro, the structure of the market, drill down to where we want to trade, what our hypotheses are for the day, and then our targets. And then during the course of the trading day, I'm doing live analysis and live trading for everybody's enjoyment, I guess. Anyway, if you want more information, just send me an email at quantumleapfutures@gmail.com, or if you like, you want to talk about the market, I love talking market, you can give me a call, 647-545-8065. Contact me on Skype, Doug_McKay. I'll be the one from Windsor, Ontario. If you want to see our past recordings and get an idea of how I operate and what our track record is, go to YouTube and do a Quantum Leap Futures search, and there's probably about 250 videos on there, 250 days of analysis. And then if you want, please follow me at Crazy2 on Twitter. And if you like what we do here, please hit the like button on YouTube and retweet to all your friends and family. Okay, before we go, we have to get the disclaimer out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Past performance is not indicative of future results. No one here at Quantum Leap is a certified trade advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades you see in here are for education purposes only. Please trade your own due diligence and your own risk parameters. Okay, so the first thing I wanted to just do a review of yesterday, but to do that, I want to bring up the composite. And yesterday morning, we were predicting and looking for a rotational day and getting stuck inside of this wick right here. This is something that happens quite often when you get, these big selling and buying tails that the next day you can get stuck in them. And most of the day we chopped around here. And so our analysis, our main plan played out perfectly. And just to go through and review that, let's take a look at what we were looking at. We opened auction just inside of range, but outside of value. And then we were using this 1933-34 area as a trade area. We said if we got back inside of that value area, that we'd be looking for rotation back down into our overnight VPOC and then into the naked VPOC down here at 18, and likely come down and give us a destination trade down to from the value area high to the value area low. We didn't quite get to, we missed it by about 5 ticks, and they rallied back up, tried to break above the VWAP. They couldn't. They came down, gave it a second try. They put a double bottom in here, and at that point in time, I was hoping that we'd get the move down and complete the 80% rule, and then go down and take out the overnight low, which was down at that all-important level at 1908, 1907. We didn't. They rallied up, and then we sort of just rotated around the overnight value, and then when we couldn't take out the overnight low all afternoon, I was saying, get long into a neutral day, and then continuation to take out the overnight high at 41 with possible extension up to the 44 area. That 44 was the prior microcomposite VPOC, and then we continue on and tested the key line in the sand. So overnight, they've taken it above there, and we've basically traded most of overnight in between the two key lines in the sand. And we'll just take a look at that quickly. We've been looking at this area right here between the 49.50 and the 58 area as an area that would be key. Above 58, we're looking for a much bigger move up into the 69 and back up into that 78 or 79 area. I've got 72.50 as an important area as well, and it's based on market profile. There's a naked POC up there at 72.50, and then 49. So right now we're trading 58. If we give above 58, I'm looking for a continuation up into now what is the overnight high, which is up there at the 68.50. There's a naked VPOC too on the Globex session 31. But if we get back below 49, then I think we're going to rotate back down into some lower numbers again. But let's not get ahead of ourselves. Let's start with our normal routine. I always like to start with a monthly chart. This is a basic candlestick chart with 9 EMA and a 20 SMA, and I start on the monthly and I start drilling down. All I want to do is see, hey, where are we within our different time frames in terms of the trend? So I'm looking for slope and separation, for strength of the trend, and where the trend is being violated. And you can see that we had this strong run up on the monthly, and they finally rolled over last month, and they closed below the 9 and the 20. That violated the trend. We're now trading below. We do have a possible FUBAR Mr. Sneaky. A FUBAR Mr. Sneaky is a reversal pattern. So this trip down to the 1831, until that's violated, until we get this Mr. Sneaky here becomes not an inside bar anymore, then you've got to be thinking that we're going to rally up a bit. How far we're going to rally, I don't know. I'm looking right now at this 1995 and 1998 for a whole bunch of reasons. 61.8% retracement, the 50% of the significant breakout candle, the measured move on the inverted head and shoulders. There's a lot of reasons why I'm looking for a continuation up. And you'll see that the same thing shows up on the weekly. We got a big move down. We created the tech gap. We got the Mr. Sneaky, or the FUBAR, a huge volume spike, a buying wick, and so far we've got a Mr. Sneaky. This is a reversal pattern to come up and close the tech gap, and I think that tech gap is going to get closed somewhere in around the 1999 area. But it is a weekly pattern, so we're not complete. We still got today and tomorrow, and if we get above the high of the FUBAR, which is the 92.75, then the Mr. Sneaky is no longer valid, but we still have the tech gap to close out. The trend, the overall trend, is down on the weekly. So we have started a downward trend on the weekly. So how far this rally goes, we don't know for sure. And you can see on the daily, we had the exact same pattern: a breakdown, start of a trend, a FUBAR, a Mr. Sneaky, and then we rotated back up and closed the gap, but they've rejected the 9 EMA so far, and we've got the continuation of the trend down. So the longer time frames is showing us that we're going to get a little bit of a rebound, okay? And I think that's going to be our Christmas rally. But as we drill down to the daily, we're still rejecting and we're still in a downward trend. So don't get your your bias too much to the long side, because we could just very easily fail from here again and come down. We've got room to go. Even on the weekly, we don't, we can come down a long way and still have a FUBAR Mr. Sneaky setup. Going into the intraday to take a look at where we are, if we've got any trends coming in, you can see that we, on the 4-hour, we're possible start of a new trend. There is a naked cross right here at 1942.50. There is a naked cross right here, but I consider this being closed because we came up and popped and took it out. These naked crosses are very powerful as targets. They will be taken out and they will be tested again. Going into the 1 hour, we do have a trend going up on the 1 hour. Got good slope, got good separation. There is a naked cross up here as well. It has not been taken out. It's up at 1970. It got pretty close, but did not take it out. Going down to the 30-minute, not as much slope, not as but we do have separation. Got a bit of a naked cross right here. I don't like these types of naked crosses where you just dip down and dip back up. I like the crosses to be like this, where the price action explodes through 9 crosses to 20, and price leaves the action alone. You can see this naked cross was closed out right here. And go and do your own back testing on this, and you'll find that it's pretty reliable. And then on the 15-minute, we've got a slight trend up, but it's pretty weak. So it could be violated pretty quickly, in my personal opinion. And then going down the last of the 5, you can see we had a big spike up. FUBAR, Mr. Sneaky, tech gap, closed the tech gap, and we're so far holding the 20 but below the 9. So we are getting what we call an MA squeeze, and a decision point will be made somewhere in around here. I think the decision point really is 58 or 49. Nothing changes in terms of those levels. All right, so going back to the structure, currently right now we're below the 58. Anywhere between the 58 and the 49 is going to be tough trading today. But if you're going to short off of the 58, 55 and a quarter, and 52 and a quarter, and if you get a bounce off of the 49.50, same thing in reverse. There's really nothing else to guide you in this area. You can take a look at the overnight. The overnight is now almost a triple distribution, but the majority of the distribution was below the 58 and above the 49.75, with the overnight VPOC right now sitting at 1955, with the 24-hour VWAP right below it. So I think it's tough trading in this area. We do have an LVN that was created here at 62, 62.75, and there's an LVN, of course, at the 49.75. I don't think anything else really gives us much clue. Above 58, look for continuation up into 64 and a quarter and 66. 69 is the naked close, and there's a 24-hour VPOC up there as well, naked VPOC. And then I've got a 72.50. Let me bring up the sorry, I was trading this open, so or this news, so I wasn't fully prepared yet. You can see that up here you've got a naked POC up here at 72.75 from 831. So that's an important level to keep an eye on. And the other one is this right here. You've got a nice bell curve right here with price acceptance just above it, up in the 81.50 area, but it's not naked. We've got some repair down here to do on that push up. If we get below 49, okay, I think we're going to have a flush down to this 39 and a quarter. And then anything below 39 and a quarter, then we're going to get back into this bell curve right here that we created most of the day and move back down into the 33 area. And you know that the 33 is the microcomposite VPOC for the 3 days that we were down here before we gapped up and tried to hold value up around 78, 79. We've now fallen back down, and the 2-day VPOC was at 1930. So if we can't hold this 49, you can have a pretty good probability that you're going to test the 39 first, and if we get below the 39, then you got a really good shot at coming down into this 33, 32. And I think if we come back down here again, I think we're going to get further weakness, and I think we're going to pop back into the 1800s again. They seem to have found value. They broke out. We're going to get a gap up again tonight or this morning. But if they can't hold that gap, I don't think they're going to have buyers with as much conviction when they come back down here. I think they're going to have to come down lower, but it will be a good short I think from 49.50 down to 39, and then 39 is going to be a really good high probability trade. So we'll have to keep an eye and see if that happens. And again, we're stuck in this area. We could chop around in this area this morning to start filling this in, and it's going to be tough trading in here. So be patient. Don't try to front run. Let's take a quick look at the news. We did have trade imbalance in Canada came out at minus 0.6 versus minus 1.4. Jobs was the big one though, 12,000. Thereabouts, new unemployment claims. Trade balance came out pretty much as expected. Right now, Draghi's speaking. I don't know what he's saying, but he can set this market off. At 9:45, we've got the final services PMI, and then at 10 o'clock, we've got the ISM non-manufacturing PMI. This will be the next big news today. Remember that China is closed today and tomorrow. So we were talking about if we held that we could get a holiday drift. I still think that's the case. As we don't have as soon as we get outside of this news after 10 o'clock, 10:30, then we got nothing really to hold us down if we can hold above 49. 49 to me is going to be so important today. And that's why it's been key line in the sand for me. So let's get our overnight numbers over, start setting up the levels we want to trade. Well, this is going to change now. And yesterday we were using it for key line in the sand for higher rotation. Now it's going to be used for a lower rotation. And we still have the 52 and a quarter as a target below us. There's, what was it, 55 and a quarter as well. But again, I think it's going to be tough to trade in here. Trying to find a trade unless you lean against the 58 or you lean against the 49.50. I don't know. I'm going to be very reluctant to try to take a trade in this area. Below 49, of course, you've got the range high from yesterday at 47. So I think you could actually take a trade from 49, a break of 49.50 into the 47. The close at 47. I don't think the open's the range is going to be the important number. I think it's going to be the gap close at 47. So if we break 49.50, I'll be getting short into the 47. I'll get funded or scaled before we get to the range high at 48 and a quarter. But I don't think it's gonna be the big number. I think it's gonna be this. And then just below that, let's get our overnight high and low in first. So I got that out of the way. We popped up to 68.75 as the overnight high. And like I said, it's just below this naked VPOC here at 69 in the naked close. It's a little bit of a cluster here. So I'm not going to use the 67 this time. I'm going to use the 66.50. And, I'll do an add-on. I'll be long, okay, up here. Trust me. If we get above 58, I'm getting long and strong for the day, and you're going to start building a position. Our overnight low is down at 44 and a quarter. And our overnight VPOC, I don't think is going to shift, is at 55 and a quarter. So right at this target. So I'll take the target out. I'll just put the overnight VPOC. We know that overnight VPOCs are targets. And the 49 LVN we know about 49.50. There's one right here at 62.75. I'm going to take this out and change this to 62.75. And there's really not much more information I can get off of the overnight, so I'll get rid of that. Bring this down. And let's take a look at our upside targets first, because I've got most of them already in there. All right, in between the 55 or 49.50 and 58, really you've got the two targets there. Above 58, you've got the 62.75. Whoops, didn't mean to do that. You've got the 62.75. Just above there, you've got the 64 CHVN, 64 and a quarter. And then just above that, you've got the CLVN at 66.50. The 3-day microcomposite VPOC is at 67 and a quarter for this distribution zone up there. So be careful. You really have to use. You can use the 66.50, which I'm going to do because I think that this cluster up here of 69.50, but just be wary of this 67 and a quarter. Don't think it's going to be a important level because you got so much up here in the 68.75 and 69.50 area. Naked close, naked VPOC, CHVN, overnight high, they're all right there. So I think you can use 66.50 as a trade area. And then above that, we've got the 72.75, the POC, the naked POC up there. And then there's really not much up there until you get into this cluster. So we got a cluster here and a cluster there. Here, cluster there, cluster everywhere, cluster when we get up into this area. But the big number, the next big target above, when we get above 66.50, is going to be this 79 area. I got to fix this. And then above 79, you got a little bit of resistance coming in at 84.75. And then above that, naked close at 88.75. The 90, what was it? 91 area is the range high. I would use the range high from this particular day, which was at 91. And then above that, you got 93.25, naked V pocket 95. And then we're getting into our important numbers up here. Well, 95 is the 50% of the significant breakout candle. That's this candle right here. This candle right here. And that was our gap and go candle. And then the 61.8 retracement of this whole move down from the 2100 area, okay, is at 99.25, and that's why it's such an important number. And I think we're going to, that's the area that I'm looking for all these gaps to be closed on the larger time frame. And then, of course, above that, you're into the 2000s, and I think from there we continue a rally up into at least the 11. Next big target above is up here at the 1150. Once we get into the 2000s. Don't think that's going to happen today, so just, we prepare for whatever, but I don't think we're going to see that. Now, below 49, you got 47, naked close, the 44, remember 44 is this former microcomposite VPOC from this balance area that we were in down here where they gapped up. And that's going to be important. And then below that, really it's all about this 30, you can see we have this thin area, below us. I think you could use 43.75 as an additional trade area. Break below that. Let me just bring this back up. You've got the 41 CHVN. That would be what I'd be targeting, but then everything's going to be about this 38, 39 area, and that's going to be another key line in the sand for us. Because if we don't hold that, then we come down, and I think we're going to test this value area. But let me tell you, I don't think that the value area high is going to hold. I think once we're below that 39, we're getting into this Gaussian distribution right here, this bell curve, and we're going to come down into, of course, the first target is going to be the microcomposite VPOC at 33, and then the big one here at 30. You've got the VWAP and the naked VPOC below there. Below that, next target below is 28. There's, just look for continuation. If we get inside of this value area, I really think we're going to see the 80% destination trade. You've got 26.75 and 25.50. I'm going to use, whoops, wrong one. I'm going to use the 25.50 as a trade area because it separates the lower distribution of this triple distribution day and puts you below the 26.75. I wouldn't get long until you're above the 26.75, but I wouldn't get short until you're below the 25.50. And then, of course, the target there is the value area low down at the 22 area. And then below there, we didn't take out this naked close at 16. I think we see it this time. And then below that, you've got 13.75 as possible support, and below 13.75, I really think that we're going to see this 08 area, and this is going to be a trade area. Whoops. '08, and then below that, which was the target, was 03.75. And then that 18.98.25 again, I'm going to move that just up to 98.75. Below that, 95, 93.75, and then a really big key line in the sand is going to be that 87 again. and below, and I don't think we're going to see that today, but we've got our targets already down. Our targets down here are all the same. Below 87, you've got the 84.50, the 72.73 area, and 64.50. I don't think we need to talk about that today. The 20-day ATR target right now is running at 45 and a quarter. Whoops. Where's my, sorry gang, I was trading, so I'm not really set up perfectly right now. All right, so our overnight low is 44 and a quarter. And our 20-day ATR is 45.24. So our upside ATR target is 89.50. And our overnight high is 68.75 minus the 45.24 gives us a target of 23.50. So those are your two average true range targets, which are within range of where we are right now, both the upside and the downside. So taking a look at gold, I keep talking about gold coming down and coming down to this 18. We're at a key level right now. If it breaks below this 22, I do think we're going to see this 17, 18 move back down in gold, especially if we rally a bit in the indices. Above 1130, looking for 33.50. Breakout trade above 43 takes you out of value and gives you a good shot to test the range high and come up into this prior microcomposite VPOC. I'm not trading gold right now because I'm looking for long opportunities, and I still think we got some downside. Why am I looking for long opportunities, you might ask me? Well, I'm looking for us to come up into the 1200. I already took one swing long from all the way down here and rode it for most of the way. I let it come back a little bit too far, but it was still a good trade. And I'm looking for, possibly looking to the long side on gold down here in the 1091 area again. But we'll see. But my longer term, hypothesis for gold is to come back up into the 1200s. This is the most traded price going all the way back to 2008. And I think we're trying to get up there. They're just running out of buyers with conviction. They got to come down and pick them up below. So that's going to complete our pre-market session. Again, my main hypothesis is to stay out of the market between this 49.50 and 58. If we get above 58, we continue the drift up. The holiday drift up with China. We still got to get through the news though. But I will be taking longs above this 58. Right now on the Keltner and Renko, we have a center line here at 56.50. If we get below it, look for a quick move back down to the 55 and a quarter. 55 area, you got the 24-hour VWAP and the 24-hour VPOC right there. And then at the run to test the lower Keltner, no surprise, 49.75, 49.50 area. If we hold above the Keltner center line, get above that 58, the upper test is up at that 62.75 right now. So that's it. As always, trade well, trade safe, and we will catch you on the flip side.